Hey, crypto warriors, welcome back to Boni's Life. I'm your host, Boni. And if you're watching this on August 12th, 2025, you're witnessing one of the most fascinating periods in crypto market history. We've got Bitcoin dancing around the $119,000 mark, Ethereum flexing above $4,300, and the markets are buzzing with more institutional money than a Wall Street Christmas party. Today, we're diving deep into the economic tsunami that just hit us with fresh CPI data, dissecting what Michael Saylor and other crypto titans are saying about this institutional adoption wave. And most importantly, I'm going to give you my precise 24-hour trading strategy with exact entry and exit points. So grab your coffee, hit that notification bell, and let's decode this market together. First, let's talk about the elephant in the room. Bitcoin is sitting pretty at around $119,000, just a stone's throw away from its all-time high of $123,205 that we hit back in July. Now, I know what you're thinking. Boni, should I be buying at these levels, or is this the top? Well, hold your horses, because the answer isn't as simple as you might think, and it all comes down to understanding the macro environment we're operating in. This morning, we got the latest consumer price index data. And folks, it's telling us a story that every crypto trader needs to understand. The headline CPI came in at 2.7% year over year, exactly matching the previous month. On the surface, that might seem like steady as she goes. But when you peel back the layers, there's a lot more happening beneath the surface. The monthly CPI rose 0.2% from June, which was in line with expectations. But here's where it gets interesting, and this is where my years of analyzing these markets come in handy. The core CPI, which strips out volatile food and energy prices, actually accelerated more rapidly than expected. This is significant because the Federal Reserve pays close attention to core inflation, as it's considered a better indicator of underlying price pressures. Now, here's the kicker that most mainstream media is glossing over. We're seeing the deepening impact of Trump's tariffs across a wider range of consumer goods and services. Coffee prices jumped 2.3% in July after rising 2.2% in June. Apparel and footwear are showing significant gains. Infants and toddlers' apparel shot up 3.3% in July, while footwear climbed 1.4%. These aren't random price movements, folks. These are systematic impacts from trade policy that are rippling through the economy. The market's initial reaction was actually quite positive. The S&P 500 futures jumped about half a percentage point higher after the data release. And here's why this matters for crypto. Investors had been bracing for potentially worse inflation numbers, especially after recent surprises in labor market data. When the numbers came in roughly as expected, it provided relief that we weren't seeing an acceleration that might force the Fed's hand. Speaking of the Fed, let's talk about what this means for monetary policy, because this directly impacts crypto markets. Interest rate futures markets are now pricing in between 2 and 3/4 point cuts through December. That's actually slightly higher than before the CPI release, which tells us that traders believe the Fed has room to ease policy despite these inflation readings. The big question for the Federal Reserve is whether they can look through tariff effects, which are typically seen as one-time impacts, and focus on underlying inflation trends. James Egelhoff from BNP Paribas made an excellent point that I think captures the Fed's dilemma perfectly. He noted that while we saw a bit more heat in services and less in goods, the Fed might actually be more troubled by services inflation running hotter because it tends to be more persistent. Now, let's shift gears and talk about what's really driving this crypto market institutional adoption. And folks, when I say institutional adoption, I'm not talking about some distant future possibility. This is happening right now, in real time, and the numbers are absolutely staggering. Corporate treasuries have collectively snapped up $113 billion worth of Bitcoin. Let me repeat that, $113 billion. That's not retail FOMO. That's not Reddit speculation. That's serious institutional capital allocation. We're seeing Harvard's $50 billion endowment allocating $117 million to Bitcoin through BlackRock's IBIT ETF. When Harvard, one of the most conservative institutional investors in the world, is putting money into Bitcoin, you know we've crossed a significant threshold. Michael Saylor, the executive chairman of MicroStrategy and arguably Bitcoin's most vocal institutional advocate, recently shared some insights that I think every crypto trader needs to hear. In a Bloomberg interview, Saylor said, "I think there is an explosion of innovation across the entire crypto economy, and on the margin it is good for everybody in the digital asset space." But here's what I found most interesting about Saylor's comments. He's not worried about growing treasury interest in Ethereum and other cryptocurrencies. His reasoning? "I still think the vast majority of capital flowing in the space is flowing into Bitcoin. And the data backs him up. Bitcoin dominance currently sits at 60.18%. Saylor also revealed that the number of companies holding Bitcoin has risen from approximately 60 to 160 in just the past 6 months. That's a 167% increase in corporate adoption in half a year. MicroStrategy itself holds 628,791 Bitcoin worth approximately $74.15 billion, making it the largest public Bitcoin treasury by far. But it's not just tech companies and forward-thinking corporations. The traditional banking sector is quietly building crypto infrastructure. JP Morgan Chase has announced trading services. State Street is offering custody. Citigroup, Goldman Sachs, and Morgan Stanley are providing trading services for high net worth clients. American Express launched a Bitcoin rewards card, and USAA integrated exchange services. The pattern is clear, and Saylor nailed it when he said that services typically go to the wealthiest clients first, then reach the broader market. We're witnessing the early stages of this rollout. Now let's talk about Ethereum, because while Bitcoin is getting most of the institutional headlines, Ethereum is quietly putting together an impressive performance. ETH is trading around $4,300, up 28% year to date, actually outpacing Bitcoin's 22% gains. This outperformance is being driven by what I call the institutional Ethereum awakening. Here's something that caught my attention. A mysterious institution bought almost $1 billion worth of ETH over the past week, purchasing 221,166 ETH. When someone is moving that kind of volume, it's not speculation, it's strategic positioning. The market for public companies holding Ether has ballooned to $11.77 billion, led by companies like Bitmain Immersion Technologies and Sharplink Gaming. Alright, let's get into the technical analysis, because this is where we separate the wheat from the chaff. Bitcoin is currently trading around $118,000 to $119,000, and the technical picture is telling us a fascinating story. Looking at the hourly chart, we can see that Bitcoin found support near the $115,500 zone and started a fresh increase. The price was able to climb above the $117,500 and $118,800 resistance levels, and even cleared the $118,800 resistance level, $120,500 resistance, to move into positive territory. We tested the $122,250 resistance zone with a high at $122,273 before correcting some gains. Here are the key levels you need to watch for the next 24 hours. On the resistance side, we have immediate resistance at $119,250. This is your first test. If we can break through that, the next major resistance sits at $120,500. This is the big one, folks. A clean break above $120,500 opens the door to $121,250, and if the bulls can maintain momentum, we could see a test of $123,200. On the support side, immediate support is at $118,200. If we lose that level, the next major support is at $117,800, followed by $116,550. The critical support that you absolutely need to watch is $115,500. A break below that level could signal a deeper correction toward $113,500. The technical indicators are giving us mixed signals right now. The hourly MACD is losing pace in the bullish zone, which suggests momentum is waning. The RSI is below the 50 level, indicating bearish momentum in the short term. However, the price is still trading above the 100-hour simple moving average, which provides some technical support. Ethereum's technical picture is actually more bullish than Bitcoin's right now. ETH is approaching the 4,400 resistance level, and the chart patterns are signaling potential for new record highs. Some analysts are targeting $5,000 based on current momentum, while more aggressive projections suggest $8,500 based on what's called a RABF pattern. Now let's get to what you've all been waiting for, my precise 24-hour trading strategy. I'm going to give you 3 different scenarios with exact entry and exit points, risk management parameters, and position sizing recommendations. Scenario 1. The bullish breakout play. If Bitcoin breaks above $120,500 with strong volume, this is your signal to go long. Your entry should be on the retest of $120,500 as support, which typically happens within 2 to 4 hours of the initial breakout. Your first target is $121,250, where you should take 30% profits. Your second target is $123,200, where you take another 40% profits. Let the remaining 30% ride toward $125,000 with a trailing stop. Your stop loss should be placed at $119,000, giving you a risk-reward ratio of approximately 1 to 2 on the first target. Position size should be 2 to 3% of your total portfolio for this trade. Scenario 2. The range trading strategy. If Bitcoin continues to trade between $118,201 and $120,500, you can profit from the range. Buy near $118,200 support with a target of $120,000. Your stop loss should be at $117,500. This gives you a risk-reward ratio of about 1 to 2.5. You can also short near $120,500 resistance with a target of $119,000 and a stop at $121,000. For range trading, use smaller position sizes, 1 to 2% of your portfolio per trade, as you'll be taking multiple trades. Scenario 3. The bearish breakdown play. If Bitcoin fails to hold $118,200 support, this could signal a deeper correction. Your short entry should be on the break below $118,200 with a target of $116,550. Your stop loss should be at $119,500. If the first target is hit, move your stop to break even and target $115,500. This is a higher risk trade, so position size should be limited to 1 to 2% of your portfolio. For Ethereum, the strategy is more straightforward. ETH is showing stronger momentum than Bitcoin, so I'm biased toward the long side. If ETH breaks above $4,400, enter long with a target of $4,600 and then $5,000. Your stop loss should be at $4,200. If ETH pulls back to the $4,200 support level, that's also a buying opportunity with the same targets. Let me emphasize something crucial here. Risk management is everything in crypto trading. Never risk more than 5% of your total portfolio on any single trade. Always use stop losses. Always take profits at predetermined levels. The market will be here tomorrow, but your capital might not be if you don't manage risk properly. Now, let's zoom out and talk about where we are in the broader market cycle. Benjamin Cohen, a respected crypto analyst, has noted that Bitcoin often follows the same pattern after each halving. Historically, Bitcoin tends to rise in August, dip in September, and then rally again. We're currently in that August rise phase, which aligns with what we're seeing. However, this cycle is different because of institutional adoption. The traditional retail-driven cycles of the past are being supplemented by institutional capital flows that operate on different timelines and with different motivations. We also need to consider global economic factors. The European Central Bank is expected to delay its final rate cut of the cycle until December, keeping the deposit rate at 1.75% for 9 to 10 months. This divergence in monetary policy between the US and Europe could create interesting arbitrage opportunities in crypto markets. The regulatory landscape is also evolving rapidly. Trump's executive order permitting Bitcoin in 401k retirement plans is a game changer. The CFTC is proposing spot crypto trading on regulated US exchanges. These aren't just headlines, they're fundamental shifts that are creating new demand sources for cryptocurrencies. For portfolio allocation, I'm currently recommending a 60% Bitcoin, 30% Ethereum, 10% altcoin split for crypto portfolios. Bitcoin remains the institutional favorite and the most liquid asset. Ethereum is benefiting from institutional interest and has stronger technical momentum. The 10% altcoin allocation should focus on projects with real utility and strong fundamentals. There are some warning signs to watch for. The RSI below 50 suggests short-term weakness. Some analysts have noted an ugly daily candle pattern that could signal further downside. If we see a break below $117,000, it could trigger more significant selling. On the flip side, opportunity indicators include continued institutional buying, ETF inflows that are competing with gold ETFs, and the fact that Bitcoin represents only 0.2% of global assets. There's still enormous room for growth. As we wrap up today's analysis, remember that we're living through a historic period in crypto adoption. The combination of institutional demand, regulatory clarity, and technological advancement is creating a perfect storm for crypto growth. But with great opportunity comes great responsibility to manage risk, to stay informed, and to make decisions based on data rather than emotion. The next 24 hours will be crucial. Watch those key levels I mentioned, stick to your trading plan, and remember that patience is often the most profitable strategy in crypto markets. If this analysis helped you understand the current market dynamics, smash that like button, subscribe for daily crypto insights, and ring that notification bell so you never miss an update. Drop a comment below with your thoughts on where Bitcoin is headed next. I read every single one and often feature the best insights in future videos. Remember, this is not financial advice. Always do your own research and never invest more than you can afford to lose. Until next time, this is Boni from Boni's Life. Keep trading smart, and I'll see you in the next one.